I've got a question here from Stancy Boo. Stancy has asked, I have Pulse, PLSX, Inc, PHEX, and EHEX, but I have no idea what these farms, LP things are. Can somebody please explain and provide some advice on how I can use the tokens I have? Welcome aboard, Stancy Boo. So you are joining the land of yield farming if you do this, and there is a risk, okay? Yield farming, let's go through these terms. LP equals liquidity providing, all right? This is like you providing vegetables at the supermarket, okay? So you are going to provide them a cucumber and a tomato. This is what you do. There's two coins, right? You've got a cucumber and a tomato. Well, this is what you see on this page. This is the PLSX page. So when you go to the farms page, you'll be able to see. So if you go to app.pulsex.com, you've got the farms. By the way, if you don't know what you're doing, just stay away. You don't really need this, okay? But if you wanted to indulge, this is what would happen, okay? You would go to this page and you'll see all these farms. Now, this is on V1. There's nothing on V2 right now. If it confuses you, just stay away. You can watch another tutorial later. When it comes to these farms, to provide liquidity, so when people come and buy, see this exchange part? When you go to exchange, so if you want to go and buy the token, you got to buy it off somebody. You have to buy it off the supermarket shelf. If you want to buy tomatoes, somebody has to leave tomatoes on the shelf for you so you can make your salad with cucumbers, okay? Now, when you provide liquidity, you are the supermarket shelf and people come and pay you money for it. But there's a risk. If you need your tomatoes and cucumbers next week, there's a risk that there's a tomato shortage and everybody takes the tomatoes off. You're like, oh man, I've only got cucumbers, got no tomatoes. I can't make my beautiful bruschetta. I can't make any of that for my guests. The good thing is, eventually, if you hold long enough while doing this service, you make enough money to compensate. How long do you got to hold? 12 months. If you don't have that time frame, stay away. If you are scared that your numbers go down in the short term, stay away. If this makes you panic, stay away. If you check it every day and you get a heart attack, stay away. Don't do this. You don't need this. You're only earning a bit of extra yield. So look, I'll be honest. If you only have like 10 grand, 6 grand, the thought of making a 6% to take this risk, 6% over the whole year to 10%, is not really exciting. Most of your gains is going to come from the buying and the holding part. Okay, you're trying to make like a 50x. 10 grand, 50x, 500k. But 10 grand, by the end of the year, you made an extra 6%. $600. If the coins are still the same price, hopefully they go up. It's not as exciting and you take on this risk, okay? So when you provide liquidity, you are the supermarket shelf and you get paid along the way. So you're asking, what's going on here? So when you provide liquidity, you collect money by default. And I've just given you the rate. On average, and all changes, you can get around 6 to 12% is about what happens in crypto over the long term. Don't be fooled by the short term 1 day, 7 day, or 30-day rates. If you average it out over a year, there's periods of high volume, low volume, crashes, and everything in between. You get about 6 to 12%. Okay. Now, what websites do, what protocols do, is they will give you incentives. So when you provide liquidity, you just get the fees. And they're like, yeah, waiting a whole year is not that exciting. We want to make it exciting now. So what they'll do is they'll make a farm. And they'll say, ooh, if you come and provide liquidity, we'll give you another token, which is more money in the short term, and you will be compensated for it. And this is what these rates are. Now, these rates go down because, once again, you never get these rates over time. All right, you never do. Because, for example, this rate is 500%. If you just put in $500,000, okay, wow, in 5 years, you make $61 million. Now, obviously, that's not... Wait, is it 61,000 million? Oh, no, 61 billion. Okay. You can see how this is not going to happen, Fred. It's not going to happen, Stancy. But of course, these numbers, they give you what the number says today. But it's going to be gone and dropping over a week or two, okay? And over a month. They're going to keep dropping down. So the advantage of doing this is you just get compensated and you get to participate. So you've said you've got Pulse, PLSX, Inc, PS. You basically got everything. You have no idea what to do. You don't need to do any of these. You can provide, if you like, you go in here, you can provide liquidity. By the way, you seem very new. I wouldn't even do this, okay? You click on here, you add liquidity. You're going to have to play around. You're going to have to add coins of equal price. So let's say, for example, that you had 50 million Pulse. If I typed in 50, 1, 2, 3, 1, 2, 3, 50 million, you will require 119 million of PulseX here. Okay. So this is about $6,000. See this dollar here? $6,000 a piece each side. If you provided liquidity, you've now joined the pool. You're going to get a tiny bit of those fees. It's going to be about 6 to 8% over a year, which is not that much. But also, you'll be able to now be given a token. You'll be able to join another farm out here. So if we go back to the farm page, right, you are now given a bonus. You're like, hey, did you provide this service for us? Thank you. Come and join this farm. We'll give you another token. And this token, incentive token, will give you an even higher rate. This says 59%, but it's the trap. It's not going to be 59% the whole time. Absolutely no way. It's just too much money to hand out. It'll go down over time. So what would happen is you'd connect your wallet. So after you provide liquidity, so step 1, you'd provide the liquidity. You go through all the steps. You got to go through everything. Click, 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 click. You're done. Then you'll be able to refresh your page, right? Press refresh. Then you'll be able to connect and join here. When you connect and join, you'll see this little plus sign. You add all your tokens in, and then you are now part of the pool with everybody else. And now you'll start to receive part of this APR. See this liquidity number here? This is everybody else who's already in. They're $95.8 million worth in. So you would be joining, right? And then you would be receiving a bit of your money. So remember, in this other example, I put 50 million Pulse, 119 million PulseX, you got $6,000 a piece, right? So if I did $12,000, because that's 6,000 plus 6,000, you would find, oh no, this is a fake rate. It's like, wow, in 1 year, you make, look at this calculator rate. In 1 year, you've made 55%. Wow, that's huge. Don't really think about that. Like, all you can go off on these is every day. That's it. In yield farms, we can't even forecast 7 days from now. That's how drastically they change. And yes, they don't change drastically on the good side, which is going up. They change drastically on the downside, which means the rate goes down. Too many people come in. The rate has to go down over time because the incentive is fulfilling itself. So basically, people are adding liquidity, which is the whole intention of doing this in the first place, all right? So, yeah, if you had $12,000, you'd be making $14 a day. Woo, $14. You would make it in this coin. To get this actually $14, you would have to go and harvest the coin, click the green button, and then exchange your INC for anything you want. You could buy a stable coin. I'm personally buying more HEX. You can buy Pulse. You can buy PulseX. You can even add more to your own pool if you really want. But this number goes down over time. I wouldn't be surprised if this number's only like $2, over time. So this is exactly what you're looking at with this field. I've got to re-stress, okay? You don't make your money from this yield farming game, okay? In crypto, in investing, or all these financial markets, you make your money, you click buy, you come back in 2.5 years, and then you click sell, okay? That's, you wait long-term. You don't have to long-term buy and hold. That's it. That's where all the gains are coming. These are just short-term things. It's because people want to support and be active, and they get a bit of incentives. But hey, I've seen a lot of people that got a lot of stress because when you put your coins in, so for example, you're providing cucumbers and tomatoes, right? Your Pulse and your PulseX, say you put 50 million in. You might find that in 2 weeks, you don't have 50 million Pulse when you check your little data board. You might only have 45 million. You might be like, oh my God, this is too stressful. I'm losing my coin. Yes, that's what happens when you provide liquidity. When you put your tomatoes and your cucumbers on the shelves, people want to come and buy them. And they want to make their own salads. Let them make their own salads. They pay you a bit of money for it. Hopefully over time, if you stay long enough, you don't panic, after 12 months, you'll probably go back to your 50 million plus 3%. And remember, you might say, hey, 3%, you said 6%. No. It's 3% each side. Okay, so it's not, I know it's not too fancy dancy, but this is the game. I mean, hey, when people are playing with like 300,000, it starts to make sense. But if you got like a couple of grand, I mean, it's still worth to try and learn. But this is the game you're now dealing with in this world. This is chasing short-term things. This is not the path to riches. These are just new concepts we can do in DeFi. All right. Hope that answers your question, Stancy Boo. Like, subscribe, button, and I'll catch you in the next one.